So, with the publicity that cryptos like Bitcoin and more recently Dogecoin have had, it's not gone under the radar of the tax man, especially when you've got Elon Musk, the man who, if he sneezed, would send the price of tissues parabolic, has tweeted about Dogecoin and Bitcoin to his 45 million followers. So, crypto tax, well, you'd think with crypto tax, it's decentralized, not controlled by any central authority, and that means that it can't be taxed, right? Unfortunately, wrong. The government has run up around £400 billion worth of debt in the UK through the COVID crisis and various other things. And as a result of that, they're going to be looking at ways to recoup this. So before I go any further, I just wanted to give a disclaimer. So this is for educational purposes only. I'm not a qualified accountant or tax advisor. And if you do want advice, please seek a specialist. And the information I'm taking is from HMRC's website for the year 2020 to 2021. So, if you do live in the UK and there's an emerging asset that people are making a lot of money on, how do you tax it? Well, that's exactly what the government looked at. And one of the things they've done more recently is contacted exchanges like Coinbase to ask them to share the information of any investor that holds over £5,000 on their exchange. And with Bitcoin hitting all-time highs recently, and a lot more interest in cryptocurrency, it's becoming a lot more lucrative for the government to tax in that way. So taking Bitcoin, the market cap for Bitcoin, which is the total value of all Bitcoin added together, has recently reached over £500 billion, or around $700 billion in US at the beginning of February. And unfortunately, it is an immature asset in the UK, which means the government haven't created any form of tax wrapper for it, such as an ISA or similar. So as a result of that, any gains you make from disposing of crypto then potentially become taxable. So I say potentially because just because you get gains, it doesn't mean you'll be taxed, and I'll explain why in a moment. So firstly, the gains we're talking about are for investors. If you're a cryptocurrency miner, it is slightly different. It's classed as an employment, and it is a different category, which, to be honest, for most people won't have an impact because it's usually big mining pools that do crypto mining and make the money for it because of the cost of the outlay. So what is capital gains tax? Well, capital gains tax is any gain you make on an investment. And when I say gain, it's a gain on the capital gain that you make. So as an example, if you invested £30,000 and that increased to £100,000 in value, your tax would be on that capital gain of £70,000. And there are two rates for it. So the first one is if you are an income earner of less than £50,000 a year, that will be 10%. And we are just talking crypto in this situation. There are slightly different rates to include if it's for residential property. And if your income's above 50,000, then the rate is 20%. And that tax becomes due when you dispose or crystallise that asset. So that's at the point of sale. So, for example, if you grew and grew and grew your crypto portfolio, never actually sold, you wouldn't be liable for any tax on those gains. However, the downside of that is you also can't spend those gains. So at some point when you do sell it, that's when you'll be liable to owe capital gains tax. And when I say dispose of, there are two things. You could dispose of if you were to cash out of it, transfer the money into your bank account. But also, which a lot of people don't always realise, is if you dispose of a crypto and purchase another crypto with it. So for example, if I sold my Bitcoin that had made a profit and purchased Ethereum or Dogecoin, I would still be liable for tax on the point of sale before I buy the other cryptocurrency. And this makes it more of a challenge because at any point you could then exceed the 12,300 if you are trading back and forth. So the government needs to pay quite a hefty tax bill back, and the likelihood is they're going to try and gain this in the form of tax from us. And unfortunately, there are rumours that this could change next year, and the rumour is that capital gains tax will be moved up to 40%. So in summary, your capital gains tax allowance is 12,300, and that will be taxed at either 10,000 if you earn under, 10% if you earn under 50k, and 20% if you earn over 50k. Over and above this, what you're taxed on is what you actually make as a capital gain or profit over and above your initial investment. The tax is on the gain. And the only other thing to bear in mind is that your capital gains tax allowance is an overall allowance. So if you owe capital gains tax for other things such as disposing of a second property, then that will be included in your taxable allowance. So I hope the video has been useful, and hopefully it's helped you at least realise what tax you have to pay, or hopefully save some tax. Thank you for watching.